everybody, and welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take. Obviously, no trades are guaranteed to profit, so you want to manage risk in a way that makes sense for you as you go after those profits. And we'll go over some ideas in that regard. Within our web trader and app, there are some risk management features built into the order window. They can make things quite a bit simpler in terms of the risk management calculations and such. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can access our web trader, which allows you to trade on both the MT4 and MT5 accounts. And also our mobile app, you can download from the major app stores, also allows you to trade on both MT4 and MT5 accounts. And the same functionalities that you'll see within this session in our web trader platform, you will also find in our mobile app. So whether it's the free signals, the market buzz, the news, the advanced economic calendar, all of the features that we see in our web trader are also available in our mobile app found in the major app stores. Now, to log into the web trader platform, we just need to go to the upper right corner here and enter your email address and password, and you'll find yourself in the web trader. Now, before we jump into the technical analysis side of things, I'd like to at least go over some ideas about the fundamental news situation so that we can all kind of have an idea of which way we might feel the wind is blowing, so to speak, for different instruments in terms of the sentiment based on what's happening in the news. And sometimes the sentiment and the fundamental news is very strong, and we have some preferences on directions in terms of different instruments that we'd like to find entry points to trade. And sometimes the fundamental news is less strong. And then it's more of just a pure technical trading day where you try and find trends on the chart that you think are maybe repetitive or predictable to be able to trade on. Now today, the market's a bit on the positive side in terms of sentiment. Fear has been somewhat low, a little bit of volatility, but in general, the numbers that came out of the US in terms of economic data showed inflation was pretty much right where it was expected to be with the CPI data. It didn't overwhelm, but it didn't underwhelm. Still some inflation there, but not as high as it was, and it came in at the predicted level or levels for the different numbers that came in. Now we still have maybe some excitement after the US elections, what many are calling the Trump bump in the markets. That's kind of related to expected policy decisions that haven't happened yet, but that are expected could happen in the future in terms of the fundamentals. And basically the Trump mantra is lower corporate and business taxes. He already lowered them in his first term, and he's looking to lower corporate taxes and business taxes below 20%. Some estimates are down 15%, 16% corporate tax rate is what he'd like to do. Doesn't mean he'll accomplish that. He's got to get it through all of the steps to get that done. But there's optimism about that on the markets, as well as all of the plans for deregulation to cut regulations on different industries, including the financial sector, the energy sector, the automotive sector. I mean, you name it, they're looking to slash regulations that were added on in the last administration. And so there's a lot of optimism on the markets about those pro-business policies. It doesn't mean it's all positive with those policy ideas, but the markets seem to be happy about those concepts. And so that's kind of where the idea of this Trump bump is coming from with the markets. And so with that as a backdrop, knowing there's some optimism about that, understanding that the US inflationary data certainly didn't come in higher than expected today with the CPI numbers. That's kind of where we sit, where maybe the excitement is starting to wane a little bit. We don't have the Dow up, 1,300 points like happened directly after the election, but we still do see a lot of green on the equities, the major indices. And, I know we're talking about US policy, but a lot of the global markets are following what the US markets have done since the election. Now, we've also seen that excitement spill into Bitcoin and the cryptocurrencies. Basically, Bitcoin's leading the way with a really strong bull run up. And some of the other cryptos seem to be trying to follow that as well. So we've got that type of optimism on the markets right now, fundamentally speaking, coming from a sentiment perspective. So now as we take a look at the technical analysis of things, and let me just maybe remove this indicator that I have on, and we'll start with clean charts. So a good place to start might be our technical signals. Those come in from Trading Central, from professional analysts that are reading the markets and send these signals out. They're largely technical based, but also obviously would take into account the fundamental news situation as well. So, we can look at something like gold, which has been dropping quite a bit lately. You might ask, well, why would gold be dropping? And it makes sense that if there's less fear on the markets, there's optimism about the stock market and the equities in general. There's optimism about pro-business policies, that gold being a safe haven when there's fear, if fear is dropping, makes sense. Gold might, at least temporarily anyways, drop down as people are a little more aggressively buying in to different stocks. And so what's the short-term signal right now after gold has had quite a drop in the past days? Looks like still to sell, okay? This technical signal already came to fruition. So had you looked at this signal earlier today, you'd have seen the pivot line up here. And the way to read these signals that you find on our platform and in our app, they tell you the direction of the primary signal, in this case, sell. They give you a pivot point that as long as the price stays, in this case, below that pivot point, which is a resistance level from the past, a price where gold was having trouble going back above, as long as it didn't break above this pivot, then the sell signal was active until it would hit the take profit zone. The take profit zone it already reached between this support level and the second support level. They're saying you might take profit somewhere between these prices because further back in time, there's support on the charts at those price levels. And if we want to take a look at that, we can look at these prices and see that they were suggesting to take profit around 25.90 down to 25.82. And so if we go maybe 2-hour candle, something a little smaller time frame, we can go and take a look at 25.90, which is right here. And we see why is that a support level. You can see that here where it's hit and bounced, hit and bounced. And so as it was going down, they're saying sell from up here, as long as it doesn't break above the pivot line, which is one of these support levels up here, 26.17, which is right here, okay? So we see resistance, 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 and it starts dropping. The sell signal said sell as long as it doesn't break above this price. And because if it breaks above this resistance, it would establish an uptrend. And so the signal is saying sell unless it breaks above 26.17, then they're saying it looks like it could continue up further. In that case, they're saying you would buy. It did not break above the pivot, so the sell signal stayed active, and it came down and hit the first take profit zone, which was this first support level where they're saying it might have trouble dropping further than that. So you might think about taking profit there. It blew through that and went towards 25.83. 25.82 is the next take profit zone, and that's down right about there where I drew that second line. If we go to 4-hour candles, maybe we get a better view. And let's get rid of this extra line from the past. So why did they say put your second take profit at 25.82 or so? We see in the past back here, this was a spot where it had trouble breaking above in the past right here, where it was hitting and dropped down. It hit this area again and dropped down. So right in this area, it was expected that if it did reach, that might be a spot where, at least temporarily, it might pause the drop. And so that's a spot for a short-term trade. And that's usually what these signals are. They're kind of short-term type moves where it might find some support in this zone, and they're saying you might take profit on a short-term move there. So this was a successful signal that already came to fruition. So it's not something that I would act on at this point, but at least it's a good demonstration of a signal that you had fundamental reasons to sell on gold. Why? We already discussed that. Less fear because of pro-business policies expected in the coming administration in the US. There's excitement about that. And so we see temporarily a sell-off in gold as the equities have been rising. So I always like to try and combine the technical signal with how do I feel fundamentally also. Do I feel like the wind is at my back, so to speak, to trade on this sell signal? And the technicals were there. It looked like a good sell. And for me, it's at least neutral, that there's no reason to think that gold should go flying up. And really, I feel there was more reason that gold has some fundamental reason maybe to continue to drop a bit with what's happened with the US election and such. So this was an easy call, and it looks like it went through both of the areas of take profit suggestion. So this is an example of a successful signal that was backed up by the fundamentals today as well. And so this is how I suggest you go about using these signals, would be do your own fundamental analysis of how do you think the sentiment is today for whatever instrument you're looking at. And then you look at, after considering the recent news, whether it's economic announcements, recent headlines, then consider what you think maybe you should do with the technical signal. Do you trust it or not? Now we could look at something like crude oil as well. You know, there's been fear of war escalation in the Middle East, and that could drive crude oil up. If there's an escalation of the war situation in the Middle East with Israel and the really a 7-front war that they've been fighting against various groups, with Iran kind of right in the center of that side of things. You know, there's some thought that Iran was threatening, you know, to disrupt oil supply from other areas of the Middle East if things escalated against them. And so that sort of escalation easily could drive crude oil price up. Well, then you say, well, why is crude oil price dropping? If we go to the one-day candles, we can see here that indeed crude oil dropped to a support level just today, right around 66.5 or so. I drew these lines last week. And we see on the one-day candles where it hit this price zone and bounced. This was back in October. Again, it hit this price zone before this month started in later October, and again bounced off that 66.5 or so price area. And now again today, crude oil was plunging down and bounced again off this support level. So the question is, why was crude oil dropping back down? There was some talk that, you know, Iran is, and I've seen some headlines just today, that they say they would hold off on any further attacks on Israel until they have a chance to speak with Donald Trump as the incoming president and work out what's the new policy situation going to be in terms of the negotiation side of things. And so I think that eased some of the tension about escalation occurring in the immediate sense in the Middle East. And maybe that's why crude oil was able to push down as gold was dropping as well, with, you know, fear kind of dissipating for a couple of different reasons. Now we take a look and see that bounce off that support level, and then you understand. You see crude oil was dropping. Why such a bounce back up? And if you're only looking at 30-minute candles, you say, wow, that's a pretty tremendous bounce, and there's no support level over here. Why did it bounce when it hit this price level and it went up so quickly? On the 30-minute candles, you can't see that. On the one-day candles, there's a support level that it got in touch with here. Okay, it's somewhere between 66.5 and 67.5. We see this zone here of support where once it dipped just below this price, a couple times here it hit that price and bounced, a couple more times it hit the price and bounced, again right where it touched today. So it's not a coincidence when you look at the one-day candles, you see with your technical analysis that there's a reason why it bounced from that price. Okay, so it seems that there's enough support here to keep crude oil from dropping below this area. Okay, why might that be? The economy's doing relatively well. There are pretty much positive numbers coming in with CPI data and other numbers. I know the jobs numbers were abysmal out of the US a week or so ago, but right now the other numbers seem to be somewhat solid. There's optimism about a soft landing coming out of all this high inflation, and interest rates are expected to continue to be lowered. So there's only so much effect that, a decrease in fear about escalation in the Middle East, there's only so much effect that can have to bring crude oil prices down. And now all of those other factors seem to be taking over from a supply and demand side to keep crude oil above this support level on the one-day candles. It's a pretty solid support level. So this is something where I could take a look and say, I can look at the signal for crude oil and see, what does Trading Central feel? Okay, they said sell, and it already went bad. You see here, it almost reached the take profit zone on the sell signal. So, it wasn't such a bad signal. It almost hit the take profit, and you could have taken a nice profit just before this first support zone that they expected it to bounce from. Why was this support zone here in the signal? We just outlined it right here. Okay, those signals are looking at all the different candles, not just the 30-minute or 1 hour. These one-day candles show the support level here. And we see in the signal that support zone was outlined in the same area, around 66.5 or so. So you could have taken profit on that signal. It almost reached that zone, but we see it did go back up and break above the pivot line now. So this sell signal is dead. It is now a buy signal. Why is it a buy signal? It's above the pivot. That's the rule here. Buy scenario. If it's above 68.40, it says look for further upside towards almost 70, 69.9 at the top of that take profit zone. Okay, so that's up here. So the expectation is now this will continue rising. That's the signal now, even though at the top it says sell. If you interpret what happened here and that it's above the pivot line, it's broken back above the 68.50 or so pivot line. Okay, so as I look at this then, if I'm interested in this from a technical perspective, the signal from Trading Central now says buy, it reversed above the pivot, and my own technical analysis on the one-day candles shows a nice support level, and the fundamentals, I think, are at least even, if not leaning towards a reason for crude oil to be a little bullish, because there's optimism about the economy. And when the economy does well, there tends to be more demand for energy. So for multiple reasons, I might decide to buy on this. From a technical perspective, it looks like a nice setup for a longer term buy. Why do I say longer term? Because I'm on one-day candles. I'm not on 1 hour candles, okay? So where would I put my take profit? I like this resistance level up here on 72.50. These are the one-day candles. This is the resistance where it hit and dropped, hit 3 times and could not break, and dropped again. Okay, so this is the resistance that I think it might have some trouble breaking past, at least temporarily, if it gets up there. So maybe 72.25, somewhere in this area here before the resistance, could make sense as a take profit on a buy. So 72.50. Okay, wow, that looks nice, 28,000 plus potential profit. Now I have to look at the risk side. I need my stop loss below the support level to feel comfortable here. So I'd probably slide this down below these wicks. I'll leave, this is the outlier. It dropped a little lower. I won't get below that one, but I'll go below this wick, and this one. It would have to break those lows in order to hit my stop loss. So about 66.13, okay, is where I drew that line. So 66.13. So I see my risk is quite a bit less than my potential profit. So this is an opportunistic setup from a technical perspective. I don't have to risk as much to get my stop loss below the one-day candle support, okay? I don't have to risk as much as I could make in profit without even having to break through the one-day candle resistance, okay? So I can hit my take profit without breaking major price levels. And in order to hit my stop loss, it would have to break a major support level. So that works in my favor opportunistically from a technical perspective. Now that I have my exit points determined and my entry point is the live market now I just need to adjust my trade size for this setup because I don't want to risk maybe 16,000 plus. That's a large percent of my balance. Maybe I want to risk only 2% on this longer term type move. Maybe I only want to risk 1%. I can decide how much I'm comfortable risking. Let's say it's 2% on this move. And maybe you prefer 1% or a 0.5% or something more, but at least know how much you're risking. So now I can start to adjust the trade size. So if I go to half a lot, okay, now I can see I'm risking 1,200, which is 2%, right? Okay, 600 would be 1% of 60,000. So 1,200 would be 2%. So I'm going after almost 2,000 profit, risking 1,200, which is about 2% of my account. If I want to risk 1%, then very simple. I'm going to change my trade size to a quarter of a lot. Now I'm risking just under 600. That's just under 1% in order to make about 1.5%, okay? Or a little better than 1.5%. Once I'm comfortable with my risk and potential profit, now I'm ready to make my move. So that was a very easy risk management setup. I'm risking about 1%. I could have done 2% or whatever I'm comfortable doing. I know in advance in the order window how much I'm risking before I take my trade. I'm in the direction that the signal says I should go from Trading Central because it broke above the pivot line. It says I should buy. I'm in the direction that my own technical analysis shows it's a nice support level. It bounced off of it. Remember, when we look at this on the 5-minute candles, that's a nice bounce. Or 15-minute had a nice view. And we see this bounce right here. There was a drop, and look at the bounce up. That's momentum type bounce. People were looking to buy at that price. And we understand why when we look at those one-day candles, okay? Because when it hit this price, there were a lot of buyers because that's a major support level. A lot of traders don't think it'll break that level, and so they bought off that support. It could easily come back down and challenge it again. But there are some reasons why crude oil should go up. One being there still is a war in the Middle East. It's not done, though there's some ease back on that tension, maybe temporarily anyways. But there's also some optimism about the economy and the markets, which usually tends to be bullish for something like crude oil. Okay, and with fear dropping, that tends to weaken safe haven currencies like the yen and the US dollar, etc. So when you can put together multiple reasons in your strategy to make a move, then you're more confident with that trade. And in this case, the fundamentals, the technical signal, our own technical setup, all kind of say the same thing. I'll pause. Any questions before I move on maybe to another instrument that we can look at? I see a question if there's a way to get push notifications when there are new signals, and the answer is yes. Go to our mobile app. Within the mobile app, you will see in the main menu that there's an option to have signals alerted to you anytime that a new signal comes out. And it's not just when the signal comes out. You'll be alerted when there's a new signal or when the signal reaches a designated important price level, a key price level. So you'll get updated each time there's a change within that signal as well, not just when the new signal comes out. And you can actually do that from each individual instrument. You can, in the settings for that instrument in the app, say that you want to receive alerts for the signals. Very good question. Okay, for now, I don't see any other questions. So let's go ahead and move forward. We'll take a look maybe at a different instrument class. We've looked at a couple commodities. If we look at a major indice or index, I should say, any of the major indices really we could look at, but we'll focus maybe on a larger scale one. The US 500 is more diverse. It's got 500 companies in it. And since the US elections are kind of driving some of this momentum, it makes sense maybe to look at a US index. There's the one-day candle setup. We see, and sometimes you want to draw some lines diagonally just to get a feel for what's happening. And you see here, this trend has been here not just from the election. Okay, these are one-day candles. The election was, a week ago or so, a little over a week ago. This trend has been happening for some time. The whole screen of one-day candles back to this point here in August. Okay, we can go back to August, and this uptrend began in August. Okay, this is an upward channel that each time it hits the lower spot, it comes up. It hits the upper spot, back down. It's the lower slope, back up. Again, resistance at the top, back down. Support at the bottom, back up. These are parallel lines pretty much. At some point this trend will end, but what I see here in this trend is perhaps we've neared a spot where a pullback is due eventually here. Why do I say that? Because each time it hit this slope at the top, eventually, sometimes after a couple attempts to break above the slope, it pushed back down each time. Okay, once, twice, 3 times. Here's the excitement of the election, a more rapid rise than the rest of them. But again, giving way to this area up here. Okay, just like these others did when it hit this slope. Now, if we start to maybe take a look at 1 week candles, we're going to see that this is indeed an all-time high, okay, as we are for many of the indices around the world, in particular the US indices. There's no resistance over here. There's nothing to judge from the past of where this might reverse from, because it hasn't been this high before. So the only thing we can do is take into account the current fundamentals along with the technical trend, and we might see if there's a signal on this to see if we think this would reverse or keep going up. Okay, when we look at the US 500 signal, what we see is it says to sell. Okay, it already proved to be false, at least temporarily, because this was the pivot line. When this was saying to sell, it was below the pivot line. It broke above the pivot, and it currently is above the pivot line, so it's no longer a sell signal. It actually became a buy signal because it broke above the pivot. So why this signal would we maybe have not followed? Okay, the crude oil signal, it was a sell signal, and I said, wow, that looked like a good one, and I was already, before looking at the signal, thinking crude oil might have had a short-term reason to drop with what Iran had to say about not attacking anytime soon. But why would the US 500 have reason to sell right now from a fundamental perspective? And the fundamentals all say there's optimism about the current administration leaving and the Trump administration coming in with pro-business policies. And so to sell in such an optimistic fundamental sentiment situation, maybe I would have chosen not to follow this signal. So when you look at the signals coming from Trading Central, this is why I say first, look at the fundamentals, look at the recent headlines and the recent economic announcements, then look at the technical signals and decide, is it one that I trust or not? And the sell signal on this wasn't necessarily something that would have made sense to me to follow this signal earlier today. And we see that indeed it wouldn't have come through, at least not yet on the sell. Now, technically speaking, I do see that this looks like it's running out of momentum on the upward movement. Like maybe it's due for a pullback at some point here. So if we go to 30-minute candles, we could start to see on the smaller scale that a resistance level, at least temporarily, has formed. And so if I want to draw a horizontal line, here's our resistance. Okay, so it tested this level once and dropped. This was last week on Friday. It opened on Monday, testing this price level again and dropped. It tried again here and didn't break it. And it tried again today, pulled back. And here we go again, trying to go to the all-time high. Okay, so we're almost at the all-time high, but it's having trouble breaking that level. So there are a couple things you can do from a technical perspective in this situation, okay? One would be the technicals show in the past when it reached this slope that it pulled back. Well, it reached that slope here, okay? Selling right now would be going against the fundamentals, but with a nice technical setup. So a purely technical trader might sell here. But I would be looking for confirmation of a downtrend before doing that. So what do I mean by confirmation of a downtrend? I'll find a support level on the smaller candles and say, okay, I need a breakout move here before I decide if there's a strong enough momentum in one direction. So I might be looking that if it breaks this support level here, that then I might sell. If it breaks this all-time high, then that establishes upward momentum and I might buy. Okay, so we're kind of stuck in a ranging pattern so far today and yesterday. Really since this week started. We reached a high and back down. We reached the high and pushing back down. And so we're ranging between the all-time high and this support level here. So in this situation where we had a failed sell signal, we have an all-time high that it's having trouble breaking. You might wait for a technical confirmation since the fundamentals aren't clear enough maybe to tell you that there's still strong enough momentum. You wait for a technical confirmation. And so if it breaks above 60.40, then maybe I buy. Okay, if it breaks this resistance. So in that case, I say execute when price hits. If the price hits 6,000 and this is 40 at the resistance. So if it hit 6,050, it broke the resistance. Okay, we're at a new all-time high basically. So if it hits 6,050, then I'll buy. I'm waiting for a breakthrough of this resistance, confirming upward momentum. That's what we call a buy stop pending order. On our web trade and our app, you don't have to know if it's called a buy stop or a buy limit or a sell stop or a sell limit. Those technical names you don't need to know. We make it very simple. Execute when price hits. If it hits 6,050, I'm buying because I chose buy. Okay. Where would my take profit be? There's no resistance above. So I have to pick some round number then that makes sense to me. So maybe based on where I put my stop loss, I'll have a certain distance that I want for my take profit. So let's say I go 50 points above my entry. If I'm entering at 6,050, maybe 6,100 take profit, then my stop loss could be the same distance down or less. Let's say I want to risk half the amount. So my stop loss then, if I'm entering at 6,050, could be at 6,025. Okay, so I've got a 2-to-1 ratio. Where would that be on the chart? 6,025 would be right about there. Okay, so it's at 6,027 now, so it would be just below where the price is now, my stop loss. So if it breaks through and hits my entry price up here, it would have to come all the way back down below the current price in order to hit my stop loss. It would have to be a false breakthrough where it breaks through and pulls all the way back down. Then I take a small loss. If it breaks through and keeps running, I get double the profit. Okay, so this is the setup. You don't have to do a 2-to-1 ratio. I could do 1-to-1. I could put my stop loss down at 6,000 even. which would be down here then. Okay, and it'd be more of a safe stop loss because it would be further back. It would take a larger pullback to hit it. Maybe it pulls back and then continues up. So you don't want your stop loss too close necessarily either. But that's up to each individual trader. That's where trading becomes more of an art than a science. Now, I'll go with the 2-to-1 setup. If it breaks through and hits 6,050, I'm in for 50 points up to 6,100. And I have my stop loss back then below that broken high, somewhere back here, around 6,025. Okay. Now I need to adjust my trade size for this trade strategy. If I want to risk 1% again or 2% or whatever that is that you want to risk of your balance, I need to adjust the trade size for this setup now. So if I go 0.25 lots, now I'm risking just over 1%, 625. So I can zero in on that, 0.24. Now I'm at 600, which is basically 1% of my balance. Okay. 6,000 would be 10%, right, of 60,000. So you could just do the math before you start to calculate your trade size and understand how much do you want to risk dollar-wise or euro-wise or pound-wise per trade. So let's say I want 600. Now I know this is the right setup for me. Okay, and so now I buy. Now, did I buy yet? I didn't. That's a pending order. I'll only buy if it breaks the all-time high and establishes upward momentum, rather than buying from right below the resistance. Doesn't make sense to me to buy from right below the resistance that it's having trouble breaking. Very well might pull back. So I'll only buy if it breaks through the resistance with momentum. I'll give up some of my entry point. It's better to buy from here than up here, right? I'll give up some of that lower entry to be more sure about it being an actual uptrend before I enter. Okay, and now the same could be true on a sell. I don't necessarily need to go through and place this trade, but you could say only if it breaks below this support level, then I'll sell. Okay, I'm less confident about that. Okay, because I think there's more reason for the market to be optimistic right now than pessimistic. So I don't think I'm going to put a pending order down here. What you could do is, if you think the market's going to pull back, you could do a market sell right now. If you trust this resistance, I could sell off this resistance. And in that case, then I might look at the smaller candles. Okay, where's that resistance level that I drew? It's right here. Here's the one, the all-time high resistance. So if you wanted to sell right now and take profit quite a bit lower at this support level, you would only have to risk a small amount to get above the all-time high to sell from. So at the same time I have a pending order to buy, if I'm trading purely technical here, it'd be nice to get my stop loss above the all-time high and take a shot at a pullback to come down towards this support level down here. Okay, so if that's what I want to do, a market sell backed up by a pending order buy, from a technical perspective, this makes total sense. So take profit down here at 59.96. I could just put an even 6,000, so I don't have to break below that even number. Take profit at 6,000, which is right down here. Okay, there's 6,000. Okay, stop loss above the all-time high at 6,050, which is our entry on the pending order, the buy pending order. So again, better ratio, potential profit to risk, to sell on a potential pullback. That's a market move if you want to sell on this situation. I tend to not like to sell against the fundamental news. The fundamental news is more positive than negative right now for the equities. So I'll sit out selling on this technical setup from below the all-time high. I feel like there's the wind blowing up right now rather than down. You could have the opposite opinion and sell off this resistance and maybe you get a pullback. Let me take a look. There's some more questions that have popped up. Okay, so part of what I'm seeing are questions about how do you interpret if the signals are saying to sell, but like we looked on the one-day candles, it looks like a buy. You can sell in the short term at the same time that you're buying in the long term. Okay, and you would have been successful maybe today with that. It went all the way down to that 1-day candle support, which the signal said it was going to. It almost reached that take profit zone on the crude oil sell on the short-term signal. So that was a very good signal that nearly reached the take profit on that. And at the same time, if you were paying attention to the larger candles, the 1-day candles, you'd have known, hey, yeah, I want to take my profit if it gets anywhere near there, because you might have been expecting a bounce in the longer term up from that support level. So to answer your question, it's okay to do both. You can diversify your trading strategy on the same instrument, even with a short-term sell backed up with a long-term buy. Okay, you're even hedging yourself somewhat in a setup like that, and it's possible to win on both. Very good question. I'm just reading some more questions, so just give me a moment. Okay, I think I answered that same question. Okay, it was the same question, kind of rephrased a few times. So if I answered your question, great. If not, let me know. Again, if you're a purely technical trader, maybe you're looking to short something like this here because the all-time high sure is a nice resistance level if you think there might be a temporary pullback. Okay, maybe that's trouble breaking that momentum. And you very well could see a temporary pullback towards the first support level down, even if it will eventually continue up. Okay. All right, I think this is a good place to stop. Our crude oil trades just trying to get going. It's slightly in the positive, but that's just getting moving. And our pending order did not trigger yet. If it hits our trigger price of 60.50, that's if the all-time high in the US 500 is broken, then we'd be in on a buy position, but only if it confirms that uptrend with a breakthrough of that resistance level up by the all-time high. I do want to show you there's some other areas. If you're looking at our Market Buzz feature for fundamental news, and we'll go over this tomorrow in my fundamental news, fundamental analysis webinar at 11 a.m. UK time. I'll be doing that tomorrow. But what you'll see is you'll find what's trending the most from a fundamental news perspective, but within this fundamental news, and you can find the most recent news on whatever it is that you're looking at here. You can click and read the entire articles, but also you see the technical analysis here. Price may rise 28%. So Tesla already went up strong after the election, maybe partly because Trump really has brought in Elon Musk as part of his administration now. Doesn't mean that should directly help Tesla, but people were excited, I guess, by that, and Tesla went up quite a bit. And you can see there's still an expectation of a further rise. Okay, you have the technical signal here, right in the same spot where you can get fundamental news about that instrument. Okay, and the U.S. market is open now, so you can take a look at Tesla and see if that's something that interests you as well. After you look at maybe a couple articles and also the trend analysis, which is a huge expectation of a rise, and then see what kind of entry price you have right now. Okay. All right, everybody, thank you for joining. Thank you for the good questions and the participation. It's always helpful for everybody attending to hear some good questions and have those answered. Good luck with your trading between now and the end of the week. And like I said, I'll have another session tomorrow. Please join if you can make it. If not, all of the sessions, including tonight's, are recorded and they're uploaded to our YouTube channel by the next business day. All right, bye, everybody.